So starting off with the Nasdaq, the S&P, and the Dow. On the daily time frame chart, we can see that price ended up tagging back inside of this daily fair value gap right here. Now, we would have preferred for price to deliver lower, so we ended up getting it wrong. He got it wrong. Yes. Like I said before in the past, if I'm giving my opinion on price, at this point, 4 to 5 days out of the week, sometimes even more, I'm bound to get it wrong. And there is a 100% chance in the future that I will get it wrong again. And it's always important to remember there is nothing wrong with getting it wrong. And even if you do get it wrong, you can still be right by means of managing risk properly. But looking at what we have now, we can see that the previous day, well, the day that just closed out, Wednesday, this daily candle has respected this fair value gap here. Now, just as we use gaps on the lower time frame, what do we observe with how candles close within the gap? And this is mainly going to be for the tier 3 people that attend the tape readings. Candle closure, but what about the candle closure? Respects 50%. Exactly. So this candle here, number one, the close respected the gap entirely, as well as the 50%, which means that there's no real concern. And it doesn't directly tell us that order flow is flipped and we're bullish now. So until, we get proven otherwise, we would like to remain bearish. Gem for the poor tier 2. But digging a little bit deeper inside of that, right here is the low of the fair value gap, highlighted right here. We can see that today, price traded back inside of the gap and then ended up closing, back within the range. But what caused it to close back within the range? Or what caused today to close back within the range? What capped today's high? 4-hour TPD. Exactly. So we have a 4-hour, and this is going to be a huge light bulb moment for some people. But we have daily time frame fair value gap, 4-hour TPD. Right, so we have these two things working for us. Now, what time frame, whenever we have a 4-hour TPD, what time frame do we look for the change in the state of delivery to understand if the TPD is high probability? The 1 hour. Exactly. So, daily time frame fair value gap, 4-hour TPD, plus 1 hour change in the state of delivery. So, with reversal TPDs, right here we have what we would like to see act as a reversal TPD. Right, price consolidated a little bit, ran higher, and we would like to see a reversal from here to continue back lower, going towards this low. These unsymmetrical lows. Right? Whenever you have a reversal TPD and you're looking for that lower time frame change in the state of delivery, sometimes you'll find a market maker model. Yes, we're talking about TPDs in alignment with market maker models. So as we can see here, the beginning of the week, consolidation, today, traded higher, first phase accumulation, then we had the TPD form, right? Change in the state of delivery inside of the TPD, breaking lower. So how do you identify the original consolidation whenever you are looking for, market maker models inside of a TPD? You look at it in the sense of unsymmetrical lows or unsymmetrical highs. That will always be the thing that sticks out for how to identify the original consolidation. And from that range, you're looking to target, if you're bearish, the lows, so the unsymmetrical lows, and if you're bullish, the unsymmetrical highs. We have a higher time frame market maker bond model on the 4-hour. Wouldn't it be holding more weight since there is a monthly cycle sequential SMT? All that. Yes, but no. And I'm going to talk about why I don't really care much about this. So, if you don't know how to properly, or what a market maker model even is, it's something by ICT, but it's a very vague concept. And using it in and of itself and trying to identify in and of itself, you'll see it's not really that great. But pairing it with TPDs, right, that is the golden ticket right there. Because that tells you whenever a market maker model is there. That tells you the reversal, that tells you, everything you need to know. But a market maker model just looks like this. So you have, a period of an accumulation, which would be the original consolidation. All right, and we'll do a bearish market maker model. And then you have another form of an accumulation, and then you have a reversal, and then you have a price going for that, back to that original consolidation. So it looks something, like this. Right, so you have that original consolidation, then you have that first phase accumulation, and then you have the reversal. Now, what dictates the reversal? A TPD. Right, and then you expect price to draw towards the unsymmetrical lows if you're bearish, and then in a bullish example, it'd be the unsymmetrical highs. So it'd be this right here, just inverted. Is there a specific sequence for pairing higher time frame fair value gaps with TPDs? Yes. As in, are we always looking for 4-hour TPDs and a daily fair value gap? Yep. How about sequential SMT with it for the smart money reversal? Can't put too much on at one time. Did you get stopped out on your trade or put the stop higher? No, stopped out at break even. But another reason why I'm not too prominent on wanting to see price draw higher is some of you have probably noticed that we have the dollar up here. So if we click on this tab, here we have the dollar on the left and Bitcoin on the right. So as you know, all of the triads and all of the assets move in correlation to one another to some degree, right? Whenever you have the dollar, trading higher, you have everything else being crypto, bonds, indices, trading lower, right? So here, we're using intermarket relationships to gauge, bias over here with concepts that we have in alignment. Now, we're not taking, and this is very important, we're not taking specific highs or lows with these assets and looking for, cracking correlations or, TPDs with specific candles. We're not doing that. No. We're using these assets here as an overall gauge to see if, what we're trading is the quote unquote oddball. Now, what does that mean? Like I said, if you look, you can see the dollar is trading higher and Bitcoin is trading lower. Right? That's what the weekly trend has been. But if we come over here on index futures, we can see that's been more so consolidative, and then today ended up trading higher. So today traded contrary on index futures compared to all of the different assets. So what does that tell you about index futures? It'll consolidate? No. Manipulation? Could view it like that. Lagging, delayed? Yes. You would want overbought. But yes, you would want to see, this asset here, this asset class, play catch up. Does that make sense? Think about it like this with the Kraken correlation. We'll draw it out just like if it were an SMT. So, let's say this is the index futures triad, right? And we have the S&P 500 here. Then we have the Nasdaq here. The S&P 500 takes out a particular high, whilst the Nasdaq creates a failure swing, failing to take out that same high. This would be a sequential S&P, right? And you expect price to, continue in the direction of that S&P. Correct? We're doing that same thing right there, but with overall market direction between different triads. So let's say we have index futures triad, we have forex triad, and we have crypto triad. And you know what? We'll even throw the bonds in there, which the bonds are the least important. So if we have the index futures trading higher, and we'll say the euro trading lower, Bitcoin trading lower, the bonds trading lower, index futures would be in the same sense the one creating the quote unquote stop run, whilst all the other assets are creating the failure swing. Now, like I said, we're not taking specific highs or lows from any of these assets and then correlating it, over here. We're not doing that. We're reading overall market direction between all of these triads here that are supposed to move in alignment with one another. Does that make sense? So that's how you properly utilize intermarket analysis. And there's going to be a core content video about when to actually use, the specific highs and lows in the sense of intermarket relations. But for right now, this is the general concept. This is what's more important. Now, going back over here, there's always a chance that we're wrong. There's always a chance that price will just continue higher and we ended up being wrong. Now, what would be the invalidation? What would tell us that we're wrong? What's the set in stone? Wednesday's high. Why? All three trade above the highs. Assets run it. Daily close above the fair value gap. Exactly. So if price closes, or not even closes at this point, if all of the assets trade above Wednesday's high, more than likely Tuesday will remain the low of the week, right? Because as soon as the assets trade above the high, that means there's zero chance for a bearish weekly cycle sequential SMT to occur if it were to occur. And if you're wondering, well, what if it runs this high out one more time? The asset that would be more likely to do that out of all of them would be the Nasdaq. All right, in terms of strength and weakness on the higher time frame, in the sense of the week, the Dow is the strongest lower, and then we have the S&P 500 in the middle, and then we have the Nasdaq being the weakest. Isn't Forex supposed to move in the opposite way compared to indices? The dollar is the only instrument that moves opposite to indices, or is supposed to move opposite to indices. The euro and the pound are supposed to move in tandem. We have a 1 hour fair value gap inside of a 4 hour, inside of a daily. To use the corresponding TPD to the highest fair value gap, yes, you can do that to gauge it better. But are we all caught up? Does it make sense why we're looking for what we're looking for? Perfect. And for those wondering, why I'm not reviewing intraday, like I said in the past, the only way you're really gonna learn this stuff is if I tell you ahead of time what it's likely to do, and it pans out, and then we do a review on how you could have gotten into it. On the days that we get it wrong, there's not really going to be much review intraday because it's just all going to be hindsight, and I don't really see the benefit in that. Which, not a lot of people teach this way because not a lot of people can read price like we can. What would the other alignments be with the 4 hour, 1 hour gaps? I would guess 1 hour TPD, 4 hour gaps, 15. Yep, exactly. Everything is fractal. How many contents have you released? Tier 3 and only have 5. I believe it's, how many is it now? I think it's supposed to be 6. Somebody, yeah, it's 6, right? For the people in tier 3, how many does it show? Yeah, that's weird. We can get that fixed though once we hop off stream. Also reverse higher with no bullish reasoning, technical wise, yes. The only thing here that you could side with for price trading higher was, the bullish monthly cycle sequential SMT. And even then, it was with the Dow. And there's, an immense amount of liquidity resting down here. Yeah, it still expanded quarter expansion, but didn't leave a gap. Yeah, if it doesn't leave a gap, that's a warning sign that the run isn't, that good. You always want to see a gap if you're using quarter expansion in and of itself as a confirmation. If there's no gap, the chances diminish, or the probabilities diminish. Do you expect some sort of negative news to hit and deliver? Possibly. I think, didn't the US and Iran come to some sort of an agreement? Somebody fact check me on this. Read the opposing, yeah. Well, that's what I was gonna hint at. But what I think is likely gonna happen is just there's gonna be war tensions, and if anything, that'll be the catalyst for lower. But what I read about, which I'm not sure if this is true, apparently they came to some agreement positively, but knowing who the president of the United States is, he's probably going to fall back on that. And especially with the ties with other countries, you guys know who I'm talking about. Yeah, good old bait and switch. Candle closure below 50% of the gap, strong sign of respect. Start of accumulation phase for market maker model. Consists of unsymmetrical lows reversal confirmation TPD, smart money reversal, properly utilizing intermarket analysis. If NASDAQ is lagging going up, all of the triads go lower than indexes to catch up with the rest of the triads. Quarter expansion, you always want to see a gap. Exactly. Precisely. Very good. Elite question asker. But do we have any more questions on anything? So short ES reversion level now. Bomb Iran tomorrow. Manage risk. That's what is most important. Current high of the week is symmetrical on the 4 hour, but not on the 1 hour. Does that weaken the 4 hour TPD in your mind? No. All right, so with that being said, go ahead and wrap this one up here. Hopefully, you all found this one insightful. I'll speak with Tier 3 tomorrow morning during the tape reading. So, good luck and enjoy the rest of your day.